So in this live stream, I'm going to start by talking about the dollar, what the dollar is doing so far. And as you can see, I kind of have quite a lot of lines on my chart today, but I'm going to delete all of them and explain the reason why I had all those lines on my chart. So the first thing we're going to do is we're going to look at the 12-month time frame on the dollar to see what the dollar is doing on the 12-month time frame. And right here on the dollar, you can see we have this swing points right here, this swing high and this swing low. Then we use our Fibonacci, and right here, if we draw a Fibonacci from the overall high to the overall low, this right here is our extreme premium, and this right here is our extreme discount. And you can see how nicely price tapped into the extreme premium. And after that, what did we see? We saw a displacement to the downside. So on the 12-month time frame, we tapped an extreme premium and we displaced to the downside. Now we'll hold that thought and we'll go to 6-month time frame. And on the 6-month time frame, we can see there's an inefficiency resting at the extreme premium level, which acts as a confluence. So the reason I'm outlining this is for you to understand how you use these extreme levels, because these extreme levels, they are what's going to help you in a situation where you have an impulsive move to the upside and you're looking for added confluence. You are seeing an inefficiency, but you're not confident the inefficiency is going to be much of a catalyst. Now, this extreme premium and extreme discount key level or zones, it's gonna be an added confluence to give you that confidence to look for potential sales right here. And when price comes to this key level, it also give you an added confidence to look for a buy right here. Because in this case, you can still see we have an inefficiency. Now, I'm not saying that I'm anticipating for dollar to come into this key level, but I'm just giving you an example because we're still going to go deeper into smaller time frames and you will see how this works both for buys and sells as well. So the next thing we're going to do now is we'll go to the 3-month time frame. On the 3-month time frame, you can see very clearly what we mitigated right here at the extreme level. You can see that very clearly. We mitigated this inefficiency, and also this was the last push to the upside before the drop down that eventually broke structure. And look at how nicely price came into the bodies of the candle, tapped into it, and we saw this displacement to the downside. Now, the next thing we're going to look at is we go to the monthly time frame. On the monthly time frame, we're going to do the same thing using our Fibonacci because we want to determine where price has been and where price is potentially going. So we're going to make this a different color. And as you can see right here, this is our extreme premium. This is our extreme discount. And in the monthly time frame, price also tapped the extreme premium. 12-month time frame will tap the extreme premium and display to the downside. Monthly time frame will tap the extreme premium and displays to the downside. What is this telling us? What is the market trying to tell us? The next thing we're going to do with this information is we go to the weekly time frame to see what the market is showing us in the weekly time frame, working with the weekly range low, which is right here, and the weekly range high, which is right here. Now we're working with this low and this high. We're using this as well to see where we are in the marketplace, where we've been. I'll make this different color as well. You can see that the extreme discount key level in the weekly time frame was mitigated. Price came to the extreme discount key level, mitigated it, and look what's there, an inefficiency. An inefficiency. So if you were so skeptical when price was coming down this low and you were skeptical whether this inefficiency is going to hold or not, you can see how this extreme key level will serve as a confluence in giving you confidence to look for buys from here for price to go to the upside. And right now you can see we have this extreme premium right here. We have an extreme premium resting right here. What do we see at this extreme premium? We see an inefficiency resting right there. You can see the inefficiency right here. We can see that inefficiency resting right there. So the next thing we're going to do now is we go to the daily time frame. And on the daily time frame, you can even see it much clearer. This is the inefficiency resting right here. So all we do now is to outline the entire inefficiency and then wait to see a significant shift in market structure from this key level. So if price should come in here and tap the extreme key level, our extreme premium position, if price comes in there and taps that key level, all we'll be looking for is going to be a potential shift in market structure in the 15 minutes time frame or in the 30 minutes time frame, because we're working with a daily time frame right here. So we would like to see a 30-minute shift in market structure from this key level. If we do see a 30-minute shift in market structure, then we'll potentially be looking for sells on the dollar. But if price comes into this key level and we don't see any significant shift, if price comes in here and we don't see a shift in market structure and it runs through, then that could potentially mean that we're hunting for this highs. But if for any reason we come into this key level, fail to create a higher high, create a lower low, breaking the previous low, what that means is that we will be looking for a retest and then for price to go to the downside, potentially running this sell side liquidity. So you can see how using the Fibonacci as a confluence, understanding the premium, the extreme premium zones, the extreme discount zones, how this can help in your analysis to help you navigate the financial market, and also using the inefficiency as an added confluence in order to make you have more confidence whether you're looking for a buy or whether you're looking for sell. In this case, right here, we had the inefficiency and it was used for a buy. And in the case of the monthly, you can see right here, the inefficiency, it was used for a sell. And now in the case of the daily, you can see right here the extra premium and then an inefficiency. All we're looking for now is for price to gravitate to the upside. And if we do see a shift in market structure, then we'll potentially look for a sell. Now, if price comes in here and we don't see the shift in market structure and none of our rules align with what we see when price comes in here, it simply means there's no trade and we're just going to have to be on the sidelines. So that being said, our focus is going to be on looking for potential buys on Euro US dollar, potential sales on Euro US dollar, on AUD US dollar, GBP US dollar, for them to go to the downside to seek for liquidity resting at the extreme discount key levels. I'm also going to show you what I mean by this, because I know just saying it is going to sound a little bit complicated, but I'm going to show you what I mean by this on the chart. So the next thing we're going to do now is we're going to look at the foreign currencies, and we're also going to look at crypto today, and I'm going to share with you tons of value on crypto today. Now, the reason for that is because if we are anticipating for a plunge in the dollar from this key level, it's going to create a lot of opportunity, life-changing opportunities, not just in trading, but also in investing. Because these opportunities are not something that is going to come by every single day. They just come by maybe a few times a year or a few times in 2, 3 to 4 years. So for the people who tune into this live stream, I want that to be an added advantage for you to leave the live stream with some level of value. So that being said, we're going to go to Euro US dollar. So basically on Euro US dollar, I'm going to pull up a new chart. So on Euro US dollar, the first thing we'll do basically the same thing we did for the dollar. Now you can see very clearly how price has nicely created a low and a high, a low and a high. Now we don't know whether this is going to be a low or not. We don't know that. But the only thing we can see right here is that this looks like a run on liquidity. It doesn't look like a break of structure. So when price came to the downside to run into this inefficiency, so you can see the inefficiency resting right here. When price came into it, mitigated the inefficiency, it took liquidity from this previous low and it failed to close below this low, showing there was a lot of buying pressure from this position. Now, because there's a lot of buying pressure from this position, it doesn't mean that price cannot still want to come back down to run this low. It doesn't mean that. But what we're going to work with is what we see in the marketplace. The first thing I want us to do, let's see what has been happening in the marketplace. If we use our Fibonacci, you can see from this low to this high, you can see price came down into a discount, mitigated this inefficiency, and rallied to the upside. So I'm going to remove that, put it here again. Same thing. Now look at where we came into. Now this is where this makes more sense, right? This is our extreme discount. This is our extreme premium. This, anything above this equilibrium is premium. Anything below it is discount. Look at how price came into this extreme discount. And look at how the extreme discount aligns with the inefficiency on the 12-month time frame, which means this was basically an opportunity for institutions to accumulate long positions on the euro US dollar. They accumulated billions of long position. When I say long position, I mean buy positions. Now, the next thing we're going to do with this information now is we're going to go to the 6-month time frame to see what the market is showing us on 6-month time frame. On the 6-month time frame, you can see that after we mitigated this key level, there's also an inefficiency resting right there. And look at how price tapped into that inefficiency right here, which is also resting at the extreme discount zone. And after that mitigation, we saw this impulsive move to the upside. Now, you have to understand that after an impulsive move, there's definitely going to be a retracement. If we're going to have another impulsive move to the upside, there's definitely going to be a retracement. Price is not just going to make an impulse move and then just keep making impulsive move without having a retracement. Just like this high right here. You can see the impulse move to the downside. After that, what did we see? A retracement. Another impulse move to the downside took this previous low. What did we see? A retracement. Another impulse move to the downside, a retracement. Another bigger impulse move, a retracement. Impulse move, a retracement. Impulse move to the downside, and now potential retracement. So this retracement could either be for price to come into a premium and continue selling, or for price to have found the low right here and potentially continue to the upside. Because if you look at this range low, range high, range low, range, and this is 6-month time frame, and this is the structure on the 12-month and 6-month overall structure is bullish. The overall market structure is bullish, but the present structure right here is trending to the downside. You have to understand the difference. The difference here is that this has consistently been going up. So each time it's come really deep down, it's consistently gone up. Whatever goes up must come down, right? And that is what you're seeing here. It's gone up and it must come down. It's gone up and it must come down. So even if it goes up from here, it's definitely still going to come down again. So that being said, now we're not trying to predict that price is going to explode and blow these highs. That is not what I'm trying to say right here, even though that is very possible because of what I'm saying right here. But in the meantime, what we're looking for is opportunity for us to make money in the marketplace. And where is that opportunity right now? What I'm going to do, we're going to scale down to the 3-month time frame. And on the 3-month time frame, you can see we're working with the range high and the range low being right here and right here. This is our range high and our range low. We don't know whether price is going to take the range high or whether it's going to take the range low. We do not know. Nobody knows that information. If the hedge funds know that price is going to rally above this place, they're going to put every single penny they have into a buy position right here, because they will literally make more than any hedge fund in the whole world, because this is going to be about 6,000 pips. So if they were trading it for, like, let's say $10,000 per pip, this is going to yield them like so much money. I can't even calculate that right now. I'm going to have to use my calculator to do the maths. So it's going to make them so much money, bigger than literally the biggest hedge funds. But they don't do that because the algorithm is unpredictable. You don't know what's going to happen. So what we do now is we're trying to look for the potential opportunities in the marketplace. And the opportunities we're looking for is within the range high and the range low. I'm going to make this a different color. So the opportunities we're looking for is within the range high and the range low. And right here, you can see very clearly, this is our high, this is our low. We came into a premium, rejected off it, came very close to extreme discount, but we didn't tap in. We expanded into the premium again, came back into a discount. The next thing we'll do, we'll go to the monthly time frame. Now on the monthly time frame, what do we see on the monthly time frame? The very first thing we see on the monthly time frame, we see an inefficiency right here at the extreme discount. We see an inefficiency right here at the extreme premium zone. You can see that very clearly. This is not rocket science. It's not magic. It's basically just doing analysis to figure out key levels that could potentially attract price into a particular position. And right here, you're seeing two things are going to happen right here in the marketplace. It's either this is going to be our drawn liquidity, or this is going to be our drawn liquidity to attract price to the upside. Now, if we're looking at what the 12 months and what the 6 months is showing us, they're already showing us that price came into an extreme discount in the bigger time frame. So even if we are to go to the downside, price is gonna want to hunt for extreme premium in the smaller time frame. So if price came into the bigger time frame extreme discounts, worst case scenario, upside move, it's gonna hunt for extreme premium. And where's the extreme premium? This is the extreme premium. And what do we have at the extreme premium? An inefficiency. Now, I'm not going to be looking for a trade and expect the trade to get to this key level, because it's unrealistic in my opinion. But what I'm going to do is I'm going to potentially be looking for buys. I'm going to be looking for reasons why price will come to the downside and potentially go to the upside, at least into this key level. Now that being said, we're going to go to the weekly time frame to see what the weekly time frame is doing, and also look for potential areas to look for buys for price to go to the upside, and also potential areas to look for sells for price to go to the downside. So now we have the high resting right here on euro. We'll have this low, So this is the range we're working with, this high and this low. And if we use our Fibonacci, you can see very clearly price came into extreme premium on the weekly. And look at the displacement to the downside. Look at the extreme discounts. Go to the daily. Next thing we do, we look at the 4-hour time frame. Now on the 4-hour time frame, you can see what we have right here. An inefficiency resting right here. Very close to the extreme discount. So if we come into this extreme discount key level and I see a 15-minute shift in market structure, I'll look for buys. And those buys, I'm going to be looking for those buys to run this high. And the reason for that is because my bigger time frames are showing me that I should focus on price coming into an extreme discount and buying it to go to an extreme premium. So if anything I said in this live stream, if you don't understand anything I said in this live stream, feel free to message me and I'm going to do more thorough in-depth analysis on this to make sure that you all understand every single thing that I've just said in this live stream. Now, our focus is going to be on potential reasons why price will come into this key level. That's going to be our focus because we have a relative equal low right here. So all we'll be looking for is what could potentially bring price down here. What could bring price down here? Now, if we go to the daily time frame, on the daily time frame, you can see price came into this position, took liquidity, and then displaced to the downside. So basically, I wanted to see an impulsive move to the downside because it's really been a very lethargic week. Price has really not made much moves to the upside or to the downside. So all we do now is to be patient and wait for price to come into our key level. And once it comes into our key level, the next thing we do is to wait for shift of market structure. And once we have a confirmed shift of market structure, we'll be looking for buys overall to run into an extreme premium. I hope this makes sense. And if you do have any questions, feel free to reach out. So in the next live stream, I'm going to dive deep into explaining the things that I'm looking forward to see in the marketplace on cryptos. I'm really going to go very deep today on my analysis on what I'm looking forward to see on cryptos. And we'll also look at GBP-AUD to see if there's going to be potential opportunities for us to get into trades on GBP-AUD as well. So I appreciate you all for tuning in today. You're all amazing. And I'll talk to you all in the next live stream. Have an amazing day, everyone.